Tuesday, 4th of June. Thanks for joining me. I'm going to run through some longer term charts. I did this a couple of weeks ago and you guys really liked it. I'm going to show you some longer term swing trade opportunities on the weekly charts and even the monthly charts. So these are positions that you can put on and run for days, weeks, and even months into the future, if you like that kind of thing. Okay, I'm looking at the Aussie versus the US. Now, you can see we're in a longer term bear trend. This chart goes back to 2011. This is the monthly chart. So it's going back 13 years. You can see we're in a bear trend and we've got resistance just above the 6800 area. But these are trend lines that you can put on your chart. You can identify the exact resistance level and watch if we get up towards those levels. But you can see here that just 6800 would be a very strong resistance level for the Aussie dollar. New Zealand versus the US is pushing higher, but we do have a big trend line around the 6180 area. Again, you can put that chart, this trend line on your chart goes back to 2021. So it's a 3-year-old trend line. Very important, strong trend line. Been tested 1, 2, 3 times. So this will be the 4th test. So it is a significant resistance area. Cable, the pound versus the dollar. Now this has been moving sideways pretty much, well, for at least a year. You can see that even from the longer term weekly chart that I've got here. And you can see how the 200-week moving average is flatlining, the 100-week, the 50-week, all flatlining because we have been going sideways for so long. Not been easy to trade, although we have had a couple of winners on this one recently. If we continue higher, and I think cable probably will continue higher, we're looking at quite strong resistance levels around the 129.50, 130.00 area. You can see we've got a confluence of Fibonacci levels there. We've got actually the 200-week moving average, which is a little bit lower. That's around 128.50. But anyway, that's kind of where the resistance area starts. And then we've got this long-term trend line going back to 2014. So that's a 10-year trend line around that 130 area. That really is going to be quite a challenge for the bulls to get through there and could certainly be a selling opportunity. Now, the Euro US dollar chart shows how we're really just trading sideways. We have been trading sideways for over a year, 18 months. There really has been very little opportunity. And the longer we trade sideways, the harder it is to find low risk trade opportunities because basically every level becomes some sort of support or resistance based on previous price action because we just keep trading over the same prices over and over again. I couldn't tell you which way we're going to go, but if we creep higher, we do have resistance level areas from the trend lines going back to 2011 and even as back as 2007. So maybe you want to put those on your charts and see if we get anywhere near there. But initially, we do have resistance from a shorter term trend line, which goes back to the beginning of 2017 and the 500-week moving average. And that is around the 112 area. I wanted to show you the British pound versus the Canadian dollar chart. We've broken above a trend line that goes back to 2018. So that's a 6-year trend line. So that really is significant. We've broken above the 500-week moving average, which is at 173.00. So having beaten both of those, this looks quite positive. We're being held back slightly by this little trend line that only goes back about a year, but I don't think that's going to hold for long. And I would have thought anywhere around the 173.00, 172.00 area would be a good support level now if we do pull back. And we might pull back because of this shorter term trend line. But as I said, I don't think that's going to hold for long. So a break above 174.50 would be the next buy signal. And it does look like the pound is going to continue higher against the Canadian dollar eventually. Canadian dollar also weak against the New Zealand dollar. Like so many Forex pairs, we've just been stuck in very much sideways action for such a long time. We were stuck. You see these two lines creating this sort of pennant or triangle. We've been stuck in that since, well, for a year. We've just broken up to the upside, but we're now running into a far more important trend line, which goes back to 2021. So that's a 3-year-old trend line. And as you can see, we're testing it, we're holding it. So the New Zealand dollar is coming up against strong resistance there against the Canadian dollar. And it was crucial, this 84.00 area. If you want to try a short, test the trend line, fair enough. We could certainly pull back to the 83.20, 83.30 area to test the break point of this shorter term trend line, the 1-year trend line. But we start breaking up through 84.20. I think we're going to have to take that as a buy signal and consider that we're probably trying to beat this 3-year-old trend line, and this short-term bull trend would then be set to continue. Not quite so exciting, but you can see the pound is losing ground to the New Zealand dollar as well. New Zealand dollar has been strong against quite a few currencies, and we're about to test some support around a fib level, which is around 206.30, and a trend line which goes back a year, and 3 months actually. So I think quite a significant period of time. So again, you want to have a look at that. 206.30 is around the area where we're going to find strong support level for the pound versus the New Zealand dollar. Put that trend line that goes back to February 23 on your chart and you can pinpoint that support area. New Zealand dollar also very strong against Japanese yen. Now look, I've got a trend line going all the way back to 1988. You may have seen this on a previous video from a couple of weeks ago, but we have broken above that trend line. 1988. I started my career in 1987. So this is a 38-year trend line that we're breaking above. It's really important, and it suggests that the New Zealand dollar is only embarking on a bull trend against the Japanese yen. Can the Japanese yen actually collapse? Now, the Canadian dollar is also trying to break above a longer-term trend line going back to the same period, 1989. Look, you can see the price action is holding above the trend line. We're not accelerating away, having broken above it, but we are holding above it. So, you know, holding above 114.00 looks pretty positive for the Canadian dollar versus the Japanese yen. Aussie dollar versus the Japanese yen as well. I've got this whole chart going back to 1970. That's where I've got my fib lines from because it encompasses the whole move down. That's all the data I can get on my chart. And since 1990 at least, we've been trapped in this very long-term triangle, as you can see. It looks tiny when you look at it on a monthly chart going all the way back to 1970. That's a 50-year piece of data you've got there. But look, if you can see down the bottom here, we've significantly broken through the 500-month moving average, which was at 94.35. So we are 100 points above, sorry, we're 10 points above there. That's 1,000 pips. That's very significant. The break is clear. We have broken above the trend line and the 500-month moving average for a buy signal. And we're only 10 points above it. So even if you jump in now, I mean, we could easily get to 150. We could be talking about another 45 points to the upside, 1,500 pips if the chart plays out according to the breakout and the fib levels. Quite a few long-term swing trade opportunities, a lot of trend lines for you to plot on your charts to drill down and examine those opportunities that I've shown you. I'm going to end up with a short-term chart. This is the 4-hour chart for the US dollar index, which has been climbing, I'll say climbing steadily. It's not been easy to run a long position in the US dollar since November 23, but you can see that we have actually been in a bull trend with very, very deep pullbacks. If you were long with any sort of trading stop loss, you would have been taken out of the position. It's been tough, but I just want to show you that we've broken down through what is a 3-month trend line here on the 4-hour chart. We've broken below 61.8% fib and moving averages. So this looks like quite a negative signal for the dollar in the short term. I hope you found that helpful. Please do like, share and subscribe, and please do put any comments in the comments box for me. I usually answer them pretty quickly.